Well, CCTV's Mark New sat down with managing partner Hans Tung of GGV Capital, which was an early investor in Didi Chuxing. He began by asking Tung what attracted GGV to the ride-sharing company.
You look at the ride-sharing as a space in China. You look at the traffic in China. You go to Beijing and Shanghai now. Car ownership in these cities are less than 10%, and the traffic jam is almost unbearable. So at some point, some kind of resource sharing makes sense to solve that traffic congestion issue. And Didi is at the forefront of doing that.
Didi Chuxing's president, Jean Liu, said she had a meeting with Apple CEO Tim Cook in April, and that several weeks later, they struck the deal. She even described it as speed dating. Why do you think they struck a deal so fast?
I think part of the reason is Jean's charm and her ability to articulate what Didi's doing. A lot of Chinese companies suffer from the inability to articulate their thesis and story and competitive advantages. The second thing is that from Apple's perspective, they are running into more structural issues. There are a lot of people who are iPhone owners today, but the next billion or more new users coming up from the rest of the world, will they be buying iPhone phones? Can they afford iPhone phones? And how will they get help in one of the key markets for them in the world, China? Didi should be a partner for them in that. So that's the second thing. And the third thing is that China, for the last 30 years, have been running more of a opening up the market in exchange for technology transfer type of strategy. Companies from U.S. that want to do well in China need to contribute more to the local innovation ecosystems.
Apple's had a little bit of a slowdown. They've also run into some difficulties, with online book and movie services recently being suspended. Do you think this is a way for Apple to sort of win PR points?
I think that's definitely part of the equation, and it should be thinking of that way. You look at the things that Mark Zuckerberg has done for Facebook. Facebook is not in China today, but everything they has done, be able to learn Chinese, be able to speak in Chinese, and even lecture in Chinese. And run in Tiananmen Square in the middle of the morning. And all that stuff has made it much easier for Facebook to eventually do stuff in China, in our opinion. That kind of appreciation for what China can do and the role China can play in the global innovation system is something that the Chinese government will welcome more U.S. companies to do that. And I think Apple's investment in Didi is part of that.
So Tim Cook should be learning some Chinese lessons.
It would definitely help.
Would you say this is a little out of the norm for Apple? Because typically they'll acquire a startup and sort of absorb that technology.
It is. I think for most, not just Apple, but most Western firms tend to make, not to make strategic investments, tend to outright acquisitions. But I think for key markets like China or maybe even India or Russia, you have to operate differently. And if you look at what Baidu, Alibaba, Tencent of the world, even Xiaomi, have done in China is a lot of strategic investments building an ecosystem. And I think a lot of U.S. firms are learning.
It's an open secret in Silicon Valley that Apple is working on some type of car. Will this benefit them?
I think car potentially will be the next big thing on a par with a TV or an iPod. And you do have Didi that's running millions and millions and millions of transactions a day. The collaboration that's potentially there for imagination for the car category, having someone who provide you or have worked with you on a lot of data sharing will be something potentially very, very strategic.
How important could this deal be for Apple Pay?
The penetration of Tenpay and Alipay in China on mobile side is phenomenal, much bigger than Apple Pay even in the US. And having Apple Pay to be available on Didi Chuxing in China will help Apple.
Didi Chuxing's big rival is Uber. Of course, you're partial to Didi Chuxing, but do you think there's room for both players in the market?
I think, to me, this is not necessarily a winner-take-all market. I think you will have someone who's extremely dominant, but it's always good to have someone, number two, number three, to keep the users and the drivers honest. So from that standpoint, I think at least a two-player market. But the market share ratio between the two will not be equal. There's one going to be more dominant. And in the US, there's no secret that right now Uber is more dominant than Lyft. And I think in China, Didi is more dominant than Uber.
But you actually respect Uber's strategy and their thinking.
I think a lot of us in China view Uber as the most Chinese US startup in China. The way they have competed is admirable from the standpoint of localizing decision-making, providing more resources, allowing local engineers to reform and making product changes. All that stuff is something that most U.S. companies are not comfortable doing. So from that standpoint, we give Uber a lot of credit, for doing something that other people have not. And we think for US companies to be more successful in China, they need to do those things. So from that standpoint, we would admire Uber. But I think from a standpoint of just in this category in China, there's no question in our mind that Didi has the upper hand.
Didi Chuxing also does some things in China that are completely different from what we see in the US. Tell me about those services.
You can hire drivers for your cars. You can order chauffeur driving services. If you want to look for different buses to take rides on, you can do that through their app as well. Basically, every single mode of transportation available in China, they're touching it and making productive but disruptive and innovative changes to each of the segments.